the market can turn on a dime from you are the disruptor to you are the disrupted.
The same SaaS companies that are getting hammered right now are also some of the biggest customers of NVIDIA and these AI companies. Their fates are not totally decoupled.
But Emily, what do you think?
I don't want to get involved in your squabbles.
I like that this parallels the arc of Succession. The theme park guy ends up on top.
Although the big difference is that Tom Wamsgans is not competent in the way that Damaro is. There's much more velocity on these prediction market sites. And if I'm losing a little bit of money much more frequently, that adds up to greater losses than if I just lose $15 every time I bet on Sinners with a sportsbook. I want all of the Slate Money listeners to join me in this trade, pump up the price, and then of course I'll be first to dump and take profits.
Nice.
And I'll rug pull a lot of you. Hello! Welcome to Slate Money, your guide to the business and finance news of the week. I'm Felix Salmon of Bloomberg. I'm here with Elizabeth Spiers of the New York Times.
Hello.
I'm here with Emily Peck of Axios Markets.
Hello, hello.
And we are going to talk about markets this week. We're going to talk about the SaaSpocalypse and the way that all of these software stocks are imploding. We are going to talk about the new CEO at Disney and what that means. We are going to talk about Kalshi. It's the Super Bowl this week, and there's people betting on Kalshi in prediction markets. I'm going to talk about that and whether they're going to lose all their money. We have a Slate Plus segment on luxury gifting. It's all coming up on Slate Money. All right, so SaaSpocalypse. I feel like this is a terrible word. Can we all agree on that?
SaaS was always bad. SaaSpocalypse is better?
SaaS was always bad, but
Sounds
SaaS
a little
was,
bit like Asspocalypse. So
and plus SaaS, like it's SaaS, but it's pronounced SASS. I don't know. The whole thing is just terrible.
I like it.
Okay, Emily, as the person who likes it, before we get to the apocalypse bit, tell us what the SaaS bit is. What does SaaS stand for?
Isn't it obvious? It's software as a service. It's like when your company buys some kind of software that manages your expenses or your days off or your payroll or your travel, and you subscribe to the software. It is a service, and a company behind the scenes is, servicing the software so it updates or whatever, and you use it, and your company pays for like 30 of these things, and it's kind of like a hellscape, honestly, if we're being truly honest about SaaS. But that's what it is.
Everything is software as a service these days. When I was, in short pants, as they say, we used to install software on our computer, and you'd install things like Microsoft Word, and then you had Microsoft Word and it lived on your computer and it worked. No one does that anymore. If you want Microsoft Word now, you need to pay Microsoft every year some subscription fee. And this is true of all of the Adobe software. This is true of like Slack, if you use Slack. This is true of basically every single piece of software that we use. We are recording this podcast right now on a piece of software called Riverside. It lives in the cloud. You can't buy it. You just pay on a sort of per license basis. And the stock market worked out many years ago that on a net present value basis, selling software on an annual basis was much more profitable than just selling it once. So everyone in the software business moved to this model, and the software valuations went up through the roof, and that's why Microsoft became a $3 trillion company, and all of these other companies. And you see this a lot in what they call B2B enterprise, which is a phrase that makes my brain want to melt into a puddle of mush. But it's basically just software that you and I don't use, but that people in companies use. And it turns out there are millions of people who work in companies who use this software, and whose companies will pay large monthly or annual fees for the privilege of being able to use it. So, Elizabeth, these companies which were doing so well for so many years and made so much money for so many private equity companies, there's one called like Thoma Bravo, which just like is insane. All they do is just they make huge amounts of money by buying and selling SaaS companies. What has happened to these companies over the past week?
Well, they're sort of anticipating areas where agentic AI might replace software that they're paying for on a recurring basis. And so Anthropic, which is one of the big AI players, just released a series of plugins that really help with workflow. And that's really the first big thing that they've done that's targeted the B2B market directly or explicitly.
Okay, so you've just used a whole bunch of words there, like workflow and agentic and targeting. Try that again, but make it, because I'm a bearer of very little brain. Explain it in words I understand.
So everybody who listens to this podcast has probably used ChatGPT or some sort of, or played at least with AIs that sort of respond to you. Agentic AIs are basically AIs that manage other AIs in order to, usually do something work-related. And that's really the future of what software looks like for businesses. So when Anthropic rolled out these new plugins, they basically foreshadow what maybe software development looks like for businesses way on down the road, when instead of having a whole team of software developers, you have one person kind of, or a handful of people managing a bunch of AI agents who are doing all the coding themselves and managing the project themselves.
I feel like this isn't really about software developers. I feel like this is about rank and file employees whose entire job these days is to sit in front of dashboards.
You're right.
Every single SaaS company is selling, the thing they sell, well, not every single one, but the vast majority of them, the thing they sell is a dashboard. And then a bunch of humans at various different companies around the world sit in front of these dashboards and look at, their customers and their cash flows and their assets and their liabilities and all of this kind of stuff. And they use various SaaS services to stay on top of all of this stuff. And I think that what's happening, my theory for what is happening in this SaaSpocalypse, is that all of these licenses are sold on a sort of per employee basis. If you have 10,000 employees who have one of these dashboards, and you have to buy 10,000 licenses, and that's why the SaaS companies make so much money. And I think what the stock market is freaking out about is this idea that you don't need 10,000 employees to have this dashboard anymore. All you need is an AI agent, and you can buy one license for an AI agent, and it can do all of that work. And probably you can fire all of those people who are sitting looking at dashboards all day, or a lot of them anyway.
It's so interesting, just looking back along the past quarter century in the software world, that this is the most disruptible industry, one of the most disruptible industries, because I'm old enough to remember when the internet was going to kill software, because everyone no longer needed their CD-ROMs. But obviously, the new companies were created. Some companies faded out. New technologies and interfaces were born. Then mobile came along. Paul Graham wrote a post in 2009 or 2007. And the title was "Microsoft is Dead," because mobile was here and no one would need Microsoft anymore. It's so lame, and Google was going to crush it, blah, blah, blah. But as you said earlier, Felix, we know what happened, which is the cloud, software as a service. Microsoft figured it out. Undoubtedly, these companies now will figure out new ways to monetize AI agents. I find it hard to believe that a company is going to want to bring in-house all the stuff that these agents can do. At least there'll just be different ways of doing it. It might cause a lot of destruction of value, and it might cause a lot of companies to go under. But I just have a feeling that
Well, when you're talking about companies here, are you talking about the SaaS companies, or are you talking about the enterprises that pay money to the SaaS companies?
I'm talking about the SaaS companies. So before we came on, I was looking at some data from PitchBook, and there's a lot of distress in the medium-sized software company world. A lot of these SaaS companies, the kind that the private equity firms are invested in, there's rising, they borrowed a lot of money really cheap, and everyone thought the party would go on and the growth would be high. Now AI is here, rates are higher, and there's a lot of trouble in that world. So I think, to answer your question, I think it is the SaaS companies that we would be worrying about.
Long term, the bigger deal is that the entire model for how you deal with your intelligence and store it is just changing. And so the appeal of AI versus traditional SaaS companies. Part of it is just that if you think about all the information that you have to manage within an enterprise and where it lives, in a lot of cases it lives in software developed by these SaaS companies, and they're very high switching costs because all these companies have proprietary systems that treat all of your information in a certain way. And if you can use AI to do some of the stuff that these companies do, the value in using AI instead is that it's portable. You can take all of your intelligence and data and just code your way into a new system that manages everything completely and is integrated with everything else. And
I'm not completely sure about that. I think that is a utopia that everyone has been selling for a long time and will never arrive.
That's what I think.
I do think that where we are right now is weirdly not so far from that. Like, most enterprises really do just keep all of their data in what they call like data lakes, like one massive great like reservoir of data, and then they point all of the various different SaaS applications at that lake and say, like, find the data you need and pull it out and organize it and structure it and then show me a dashboard. But yeah, you're right. Like, once you start getting used to dashboards and putting the outputs in PowerPoint decks and stuff, there are switching costs. But I think that the idea of just keeping all of your data in one place is a place we've kind of got to already. What they're worried about, or what I think the stock market is worried about, is just that the number of licenses that companies are going to have to buy in order to be able to pass that data and get useful information out of it is much lower than it is right now, because they're going to be able to use AI agents to do a lot of the work rather than humans, and it's the humans who are paying for the licenses, not the agents.
The stock market reaction, so they reacted specifically to this plugin, like Elizabeth said, for legal work. So all these like legal software company stocks fell, like LexisNexis, I think.
Thomson Reuters, yeah.
LegalZoom.com. But I was coincidentally reporting a story that I hope will come out this weekend on how AI is disrupting the legal industry, whatever. So I spoke to some of these lawyers and I was like, are you just freaking out about the new AI plugin? And like, what's going on? Is everyone using it? And they were like, well, first of all, the plugin doesn't do like some core things that lawyers need, like look at all the cases, like case law, or it doesn't, it's not connected to that in any way, to case law, to cases. And it's not connected to statutes or laws or anything like that. It's more like another like evolution in document management, which is important and like will be helpful, I think. But it wasn't like, burn down all the legal software. I mean, I guess the stock market is very future looking, so it's thinking like 70 steps ahead.
Let's be clear about this. This was not in any way, shape, or form a major announcement from Anthropic. They didn't even announce it. This was just a tiny little plug-in of the kind of thing that they roll out, every so often with no fanfare, and everyone's like, oh, this does this, it does that. It's very much a sort of straw that broke the camel's back thing. We have seen in recent weeks this massive plunge in silver, a massive plunge in crypto, a bunch of asset classes that looked kind of frothy and fragile, just like the floor disappeared out from under them. And once the selling starts spiraling, the catalyst for that selling, the spark that causes the selling, is kind of irrelevant at that point. Does anyone know why silver started going down? No one has a clue why silver started going down. But once it started going down, it just got this kind of downward momentum, and no one knows where it's going to stop.
Didn't they say it was Donald Trump?
It's probably Donald Trump.
I feel like you could always just be like, it's Trump, and everyone's like,
Trump.
yes, that's what it is.
But I think what this is just telling us is, that it turns out that a lot of these SaaS valuations were, kind of crazy. Like that, these SaaS companies were trading on like 60 times future earnings. And you're like, well, that, it's not obvious where that growth is going to come from in the world of, AI. So maybe we should start trading these companies on a sensible PE ratio rather than a not sensible PE ratio. And this could just be a reversion to sensible.
Part of what's happening is just that now the market there's a discourse around AI specifically, where the markets start developing a theory. And as soon as there's an announcement that kind of confirms the theory, even if it's a minor one, it's sort of like, well, this is what we were talking about. Look, here's an example. And I think that's what the plugin kind of started a cascade of confirmation bias.
I disagree with that. I don't think the market has a theory. I don't think the market has a clue what's going on. I think we should announce, actually, we have a major announcement on Slate Money, which is that Emily Peck has a new job and is now the sole lead writer of Axios Markets, the newsletter. When I was talking to Emily about this great new life that she is about to embark upon, one of the things that we have discussed many times is that most of the time, most moves don't really have a reason. They don't. It's not one of these things where people have a theory and then they try and buy and sell in order to align their beliefs with their positions. It's just, it's stochastic, it's noise. Most market moves are noise, they're not signal.
But zooming out, the bigger picture story of AI agents disrupting the business of SaaS is an accurate story. And these companies are in trouble. Like we have the bond data to show that their levels of distressed debt are higher than other categories.
Well, the reason why there's a lot of distressed debt in this sector is precisely because this is the sector that was most popular with the private equity companies. And as we all know, as we've discussed many times, the private equity companies, the way they make money is by leveraging up their portfolio companies way, way more than most normal listed stocks. So if you're looking for those places where you find excess leverage, it will obviously be in the most levered PE-owned stocks, and those happen to be the SaaS companies. Or most levered PE-owned companies, I should say, because a lot of them aren't even public. This is an unwind of a trade, but I don't know if it's like a thesis coming true. I don't know that AI is going to kill SaaS. If you look at the SaaS earnings, before you start worrying about where they hit the capital stack and the equity and the debt and all of that kind of stuff, so far the earnings are fine. They're still going up and to the right. They're not falling. What we are seeing here is a PE ratio compression rather than the earnings going down. But as Elizabeth says, a lot of people like to think of the stock market as a sort of prediction machine, and the stock market is now predicting much lower future growth. I don't think the stock market is predicting negative growth, though.
Oh no, well, I don't think that. I don't think that it's an either or. In some aspects, it is an unwinding of a trade, but I do still think that there is an emerging consensus about how AI is going to affect corporate workflows, and that does get built into analyst estimates about where these companies are going to be because they're gauging workflow substitution risk, and that is exactly what the Claude plugin, kind of speaks to directly. It's how are workflows going to change within the enterprise because of AI? So I think it could be both. I don't think it's
it could be both. No, I think it could be both. I think it's one much more than the other, and you think it's the other much more than the one, and it's very hard to tell. Yeah. I will say that when you're saying that there's a consensus, the loudest voice on the other side of that consensus is Jensen Huang, right, the founder of NVIDIA, and he's like, this is the dumbest thing.
Well, I think he has an incentive to say that, though.
Why? What's his incentive to say that?
Because if the SaaS market comes down, it could easily drag NVIDIA's stock price with it.
Go on.
Because I think, all these things we're in an interrelated economy. And part of if you're selling AI software, the same SaaS companies that are getting hammered right now are also some of the biggest customers of NVIDIA and these AI companies. And so their fates are not totally decoupled.
I don't know. I'm not convinced. But Emily, what do you think?
I don't want to get involved in your squabbles. I think it's pretty clear, like however you want to frame what happened in the stock market last week, it's pretty clear that there's a huge new technology on the scene in AI, and it's going to change the way that people work with software, and it's probably going to create winners and losers and new players in the market that's been relatively stable for like the past 10 years, which is software as a service. Like all these companies are going to start putting and have started putting AI into their software already. And then I think the question or the thing I'm kind of like watching is like, is it going to make any of the software better? Because like the bottom line is most of these software programs are so bad. I was recently, I won't name the the company, but I did a story. And so I was talking to one of the providers. I've used their software as an employee at various companies, and they were talking about AI and how they're incorporating it into the software, and it's going to make it so great. And I was like, is it? Because I'm going to be honest with you, it's not great now. Like, it's really confusing. I don't know what this is. Like,
yeah, I don't know what company you're talking about, but if it's Microsoft Copilot, I totally agree.
They're putting the plugins in Gmail now where you can search your Gmail. It's so bad.
No,
I could have done it myself the old way. Like, and everyone says when you say that, they go, it's getting better every day,
but
every day. And it's like,
it really isn't.
It's super not. Like, it doesn't do what I want it to do yet. You know what I mean?
I want to go back to this theory, though, that you have about AI is going to make a big difference. Because let's take a company I'm very familiar with because I worked there for many years, which is Thomson Reuters. Their share price was just a flat line forever and ever and ever. It just didn't move. And then starting a couple of years ago, it skyrocketed. It took off like a rocket. And all of the people I know at Reuters who had stock in the company were like, holy shit, I'm rich now. Because the market was like, oh my God, you are an AI company now, and you are going to make so much money from AI. And it was part of the AI trade. The idea was very much that Thomson Reuters, which is like basically a legal services company, owns Westlaw and people like that, it was going to be able to do amazing things with AI for the legal community, for all of the law firms and everything. And this was going to bring in massive amounts of money at huge profit margins, and it was just going to be one of the big winners from AI. And then suddenly, a few weeks ago, then everyone's like, well, no, what if instead of being one of the big winners from AI, it could be one of the big losers from AI? And the stock market started plunging back down to earth. And yeah, we all know that AI is probably going to change shit, but it's so cloudy. The outlook is so impossible to see that, the market can turn on a dime from you are the disruptor to you are the disrupted. What we thought was like a core moat of yours that was going to make you billions of dollars now just looks like a plugin that Anthropic can release on a whim. And probably neither of those things are true. The truth of the matter is somewhere in the middle. But I do think that we are in this particularly sort of opaque and fuzzy moment right now where no one knows anything.
It's exciting. It's a moment of true disruption when we don't know what the future will bring. And saying this as like an old person, this is the third time I'm seeing it. And you can see it's very similar each time. Things are getting destroyed, but you don't know what gets built. So it's it's very scary. But it'll just be interesting to see what gets invented and what changes and what things come about. I don't know. It's interesting. And maybe companies like Lexus or like Thomson Reuters that's been on the roller coaster, maybe they have to fire a lot of people, but then they make more money. So then their stock goes up. Maybe the Fed has to lower rates a lot. So we can see lots of new companies get founded and created and invent new stuff. It's cool. Right? Right, guys?
I love this. So I'm looking at my phone trying to work out.
So rude. Are
Yeah,
people seeing this on the YouTube? He's checking his phone while I'm speaking.
So I was checking my phone because I was trying to remember what the hell what we're talking about. What's the next segment? I need to find I need to find a segue. Oh, is there a segue from?
We're talking about the
Disney?
business
They
of
put money
tomorrow.
into Sora.
Yeah.
They put money into AI.
I was going to say we're talking about the business of tomorrow, but now we're talking about a guy named Tomorrow.
Oh, Emily, damn. That's one for the
Just
record
tomorrow
books,
in the business of tomorrow.
Because doesn't Disney have Tomorrowland?
Yeah.
So
and
vibes.
Bob Iger was focused on the future, and Tomorrow was his middle name, but the new guy Tomorrow is actually his surname. Disney has a new CEO. His name is Tomorrow or Tomorrow, depending on how you want to do it. He comes from Parks, which is where Disney makes most of its profits, and he comes not just most of its profits, but an increasing proportion of its profits. The parks are doing great and up and to the right, and everything else is, to put it broadly, not, and is shrinking. So when the Disney board needed to choose, like, do we choose the parks person or do we choose the Hollywood person to run the company? They were like, well, let's put the guy who's actually making the money in charge rather than the woman who's losing money. Or
the guy who
making
dresses
less money.
exactly like Bob Iger versus a woman.
They are throwing like $24 million a year at the woman
Yeah.
and making sure that she stays on.
Yeah, we should unpack that because that's the whole James Gorman twist to the succession.
Yeah, so James Gorman is the chairman of Disney. You will remember him, long-standing Slate Money listeners will remember him as the former CEO of Morgan Stanley. And when he left Morgan Stanley, there was another one of these like bake-offs at Morgan Stanley, who's going to be the new CEO. And normally what happens in one of those bake-offs, and we just saw it at Berkshire Hathaway, is that one of the guys becomes the CEO and the other guy leaves. And in Morgan Stanley, he managed to keep the other guy at Morgan Stanley. And in this case as well, he managed to keep the other guy, who's actually not a guy, who's a woman, at Disney. So he's very chuffed with himself and taking a little bit of a victory lap.
Also, Disney is very hierarchical. And so I think the reason why everybody thinks that this might actually work is that Dana Walden, who's the new chief creative officer, which is a title that they created for her after she lost the bake-off, is reporting directly to Josh D'Amaro. They're not trying to do some co-CEO thing where inevitably there are going to be conflicts. You know, D'Amaro does have the sort of final say in everything. And whether Dana Walden wants to work with him in that way, it seems like she does from all of the reporting. Like, it seems like this structure makes sense.
Yeah, and I think like on some level, she just gets to run Hollywood. Everything,
which is
all
the
of the
prestige.
stuff which is the prestige job, and she's making a shit ton of money doing it. And she's a very important person, and she's actually becoming more important as a result of this. And 99% of the time, the buck is going to stop with her.
I like that this parallels the arc of Succession, the TV show, where Tom Wamsgans, the theme park guy, ends up on top, and then the kids get the prestige business.
Although the big difference is that Tom Wamsgans is not competent in the way that D'Amaro is.
Fair.
I think, like, in a weird way, I would rather have Walden's job than D'Amaro's, not just because it's more glamorous, but because you can be a loss center running the movies and the streaming platforms and all of that, just so long as all of that IP that you're creating can then flow over to the parks and to the experiences and all of the rest of it that D'Amaro is coming from, and he can monetize that in a much more effective way. If a movie ticket costs $20 and a ticket to Disney World costs $200, then kind of so long as you're keeping the demand for tickets to Disney World, it doesn't matter so much if you're not selling the movie tickets.
We should also mention that Walden was considered the front runner for a long time, and then it became clear that D'Amaro's unit was so much more profitable than the rest of the company.
Yeah.
But all the tea leaf reading in the reporting is so fascinating. Like, people are reading into the fact that at Disney's summer retreat, D'Amaro lost at pickleball, and they considered that a bad omen.
Next time it's going to be curling. Bloomberg has this whole story about how curling wants to be the new pickleball.
One of the quotes, I think it was Bloomberg somewhere, a Disney CEO, it said, is an instant celebrity. True? I feel false. Maybe in the past, but not anymore.
Michael Eisner was a celebrity.
Yes.
Bob Iger definitely became a celebrity, definitely in the corporate world. He did a couple of massive deals that transformed the universe.
He was a corporate celebrity, but I don't think it translated out bigger picture like Steve Jobs
sure,
level.
Yeah, he's not a Steve Jobs level celebrity. Well, I mean, Steve Jobs also, is in the Disneyverse. He sold Pixar to Iger.
Yes.
But yeah, I think that little one we had in the middle, who was slightly disastrous, Bob Chapek, he signally failed to become a celebrity, and I do get the feeling that D'Amaro has no particular need to step into that part of Iger's job, and is happy to let Walden be the sort of face of Hollywood.
I think he is, but what's interesting about him is that he seems like a true Disney believer in a sort of little kid way. Like, he slept overnight in the princess cap.
Yeah.
He gets really excited about stuff.
Yeah, and that's good.
And so I think he could become, if he's more public about that, or he's more public facing, he could become a sort of CEO celebrity just because he's so enmeshed in the brand?
100%. If his comms team decides that he's going to be like a thought leader going out, being interviewed by David Rubenstein and appear and doing TED Talks about the magic of Pixar and all of this kind of stuff, he has a lot of very expensive people who can write him really inspiring speeches. I just don't think he has any desire to do that.
I think the idea that a CEO can become an instant celebrity is over. I don't think, first of all, that CEOs want to be celebrities. Like you're saying, I don't think Josh D'Amaro wants to be a celebrity. I don't think there's appetite for that, because being a celebrity CEO just makes you too high profile, especially right now with the person in the occupant of the White House, because if he has like a very visible target of the company, it just makes things worse for the company. So it's better not to be that kind of like old fashioned Steve Jobs, Eichner kind of celebrity CEO. I think the era of the celebrity CEO, this is my hot take, is over. Like Andy Jassy, does anyone know?
Exactly.
They still think Jeff Bezos
I was just thinking about
CEO.
that.
Yeah.
Everyone thinks that Jeff Bezos runs Amazon.
Right.
And I'm sure Andy Jassy is very happy for everyone.
Right. It's better
Jeff Bezos
that way.
runs Amazon.
Yeah.
Even at Microsoft, I don't think Satya Nadella is like a celebrity. He's just a
Google CEO. No one knows.
Who is the Google CEO?
What about
It's that guy.
Elon, though? I mean, that's the sort of...
He is the exception.
And
but Elon is a founder. He likes to think of himself as a founder. He's not a hired manager. No one in the history of the world would ever hire Elon to be a manager. No.
Super no.
And that's the difference. Like the CEOs that we're talking about, like if you are at a big public company and the board of the company is picking the next CEO, that kind of CEO who's been picked by a board, who's come up through the ranks or has been a manager somewhere else and is now going to be a manager here, that kind of CEO celebrity, I think, I agree with Emily. Like there were a few of them along the way.
Jack Welch, who we
Jack
talked about a lot
Welch,
in the past.
Possibly still Tim Cook would count. But
Gates, obviously, although he's a founder.
No, Gates is a founder. And then ever since Gates, But I think I agree. And Disney has always had this kind of aura around it because it's Disney. But now, now all of the aura is moving over to, I don't know, OpenAI, and Sam Altman is the celebrity.
Founder.
Like
you said, yeah. And for better or for worse.
Hey there! Before we get back to the show, I want to tell you about The Slatest, which is Slate's daily newsletter that lands in your inbox every evening. It's written by Slate's editor-in-chief, Hilary Fry, and it is the perfect way to end your day a little smarter than you began it. Every issue pulls together the sharpest stories, the most surprising news, and the can't-miss Slate podcasts, including this one, plus smart analysis and a bit of well-earned distraction. From DC to Hollywood to the algorithm, The Slatest keeps you clued in to the world and to Slate. You can sign up right now at slate.com/theslatest. What's up next?
Kalshi.
Oh, here we go. So I have a bet on Kalshi about the Oscars.
You do?
I do.
What is it?
I bought Sinners to win Best Production Design.
Okay.
That's very niche.
At 7 cents. On the basis that, I think because it had 16 nominations, there's going to be a point in time where there's a feeling that Sinners might just run away with it, and so that could start trading up to 20 cents or something, and I can double my money and then get out before the actual result.
Ooh.
This is a trade, not an investment. This is not necessarily a hold to maturity trade. I don't think it's necessarily going to win. But I do think that the probability is going to rise from where I bought it.
Is you talking about this going to change other people's bets?
Oh, I hope so. I want all of the Slate Money listeners to join me in this trade, pump up the price, and then, of course, I'll be first to dump and take profits.
Nice.
And I'll rug pull a lot of you.
How much money will you make? How much did you bet?
I bet $15.
Whoa. So
Yeah.
There's a lot on the line.
There's a lot on the line here.
It's like 2 coffees in New York City.
How much do you make? How does that? I'm not good at this. I know we just said I'm running markets starting Monday. But.
So if I hold to maturity and Sinners wins, then I get over $100. But if I sell it at twice what I paid for it, then I make $15.
And you want to make 15 rather than gamble on making.
If it just kind of stays at its current level, I think I'm up like $3 or something right now. If it just kind of stays where it is, then maybe I'll just gamble the 15 and I'll hold to maturity. And if it surprises everyone and they win, then I make lots of money. I'm okay with losing the $15.
Felix, you are in the sophisticated pot of gamblers in Kalshi.
Absolutely
and where we're
not.
going with this kind of is that this report came out that says that people who are sort of less sophisticated on Kalshi are losing more money than people who are using sports books. So I think you have to explain.
So the way that Kalshi makes money is very, very similar to how stock exchanges work. It's got a maker-taker system. You can see a bid-offer spread, and if you just hit that bid-offer spread, if you're like, I will buy at the offer or I will sell at the bid, then you're what's known as a taker. But the people who are offering the contracts at the bid and the offer, they're called the makers. They're the market makers who are setting the price. And Kalshi takes a commission from the taker, who's me just buying this thing on Kalshi. If I was out there like setting a price saying, I'm willing to buy at this level and then wait for someone to hit that, then I would be a maker and then I would not be paying commission. Just because in this case I was a taker and not a maker, like I am basically the dumb money here. The smart money is the market makers and the people who are like trading much more frequently and in a much more sophisticated manner.
Wait, I'm sorry. So Kalshi isn't the one making those different markets. It's individual people on Kalshi. They sign on and they say like...
There is no sports book. So Kalshi and Polymarket both work
so
the same way.
I'm sorry. So I could go on to Kalshi and I could say, Felix will interrupt Emily and Elizabeth 15 times.
Yeah.
And I could sell that as like a market on Kalshi.
Yes.
I could.
Well, I mean, they would need to set up the market. But once they set up the market, then it's up to the users of the site to start making prices on it. When Kalshi sets up the market, all it does is it sets up the market, and then there's price discovery from the users.
That's so cool.
Kalshi is the marketplace.
Yeah.
And then the market maker is the one who's setting the bid and offer. Or often there's two different people. One has got the highest bid, one has got the lowest offer. And then that spread is the bid offer spread, which the takers can either hit or they can just try and put in their own bids and offers inside that spread.
So this is in contrast to the way the sports books work, where the company is making the market, and Kalshi is arguing that their business is fairer because they're not on the other side of the trade, right?
Not just fairer, but in aggregate, bettors lose less money on Kalshi than they do in sportsbooks, because the sportsbooks, are taking a higher percentage of bets than Kalshi is or than Polymarket is. So if you just look at the entire aggregate of all of the activity on these sites, then the people playing on Kalshi, and this is just a game, it's not an investment, are losing less money than the people playing on sportsbooks in Vegas or anywhere else. But, and this is the interesting thing that we're talking about, what was reported this week, is that the median gambler on Kalshi actually loses more money more quickly than the median gambler on sportsbooks, partly because Kalshi encourages a much faster pace of gambling. Like if I were to go to a sportsbook and bet on Sinners winning Best Production Design at the Oscars, then I basically have to hold that to maturity. There's no way that as the odds change, I can then go back to the sportsbook and say, I'd like to unwind this bet at a profit. Mm-hmm. So there's much more velocity on these prediction market sites. And if I'm losing a little bit of money much more frequently, that adds up to greater losses than if I just lose $15 every time I bet on Sinners with a sportsbook, because I'm trading in and out. And then the other thing is that because most of the players on Kalshi are takers rather than makers, they are taking all of the losses basically. The makers are making money. Like Kalshi is profitable for some people. And so the median amount that you lose is much, much higher than the average amount that is lost.
Sorry, I was getting bored. I'm so sorry. The median amount that you lose.
The difference
what?
between mean and median is very important here.
Okay.
The mean losses on Kalshi are low, but the median losses on Kalshi are high.
Okay. Oh, that was interesting. I caught that in the article on Bloomberg, actually, because the article says median losses are high. And then Kalshi's response was average losses are low. And I was like, bro?
Exactly. So just beware these prediction markets because you are not as smart as you think you are, I think is the lesson here.
Okay. And then there was a fun little backstory in the Bloomberg piece where this data comes out published by Citizens Bank, I think.
Or Jelly Roll or something, and then citizens use the data from Jelly Roll.
Was it Jelly Roll? Should we actually make an effort to get it right? Perhaps Juice Reel.
Juice Reel.
Much healthier. So then the Bloomberg reporter reaches out to Kalshi to be like, what do you think of this report? And they're like, it's wrong. And also this is extortion. The Juice Reel is trying to get us to pay it to not release the data or something like that. But then Kalshi called the reporter back and was like, actually, it's probably not extortion, but it's still wrong. And then they did the whole average to the median thing, which...
Well, what she said, the comms person said that Juice Reel had approached them about an investment or something. And the Juice Reel CEO was like, I didn't do that. They called me and asked me if I would get rid of this data.
Yeah. It's not a good... It doesn't... None of it makes anyone look... Doesn't make Kalshi look very good.
But, I mean, they're up and to the right. They're going to be making lots of money on the superb owl and all of that.
But one thing, when you say that the median loss on Kalshi is greater than what people lose on the sports betting sites, it's as a percentage of what they're putting down. So it's not as like people could be betting lots more money on the sports sites. We don't know.
Yeah, exactly. Just on a percentage basis.
Right.
Kalshi seems to be quite good at getting people to trade more frequently. And just in general, if you trade more frequently, then you're going to lose more.
But it could be like smaller amounts for the people, which seems like not as bad as like trading less frequently for bigger amounts. But I don't know. That's not math.
Like it's you can't do this as a percentage of like net worth, right? Because we just don't know what people's net worth are. If people are betting, if this is just like fun and games on Kalshi and they're saving their big bets for the sports books, maybe that's where they lose the big money. We don't know.
And finally, what is a sophisticated Kalshi investor versus an unsophisticated Kalshi investor or trader or whatever?
The sophisticated Kalshi investors are the ones who are constantly arbitraging with Polymarket, really looking at this like a very illiquid trading market where there's lots of short-term trading opportunities and who often either work at or would want to work at somewhere like Citadel or Jane Street or something like that. And they're not sitting there just going, I think the Patriots are going to win, so I'm going to bet on the Patriots.
I would just say that now that I'm back on Axios Markets full time, if a sophisticated Kalshi investor is listening, that they should get in touch with me because I think that's interesting and I haven't read very much about the sophisticated Kalshi investor types.
I agree. I would love to read about that on Axios Markets.
Please subscribe.
Numbers round. Emily, what's your number?
Yes. My number is 2000.
Is that a year?
Well, yes, but not in the context of my number.
I thought we were talking about stock market crashes and we're going to have another stock market crash number, but no.
No, 2000 is the number of cold, stunned iguanas.
Oh my God.
collected by Florida's Wildlife Agency last week after a 2-day cold snap in Florida.
Oh my God, the poor iguanas.
Oh my God. So I read the story. I heard about it in Axios because our Miami newsletter reported on it. And I was like, oh yeah, whatever. Iguanas, stunned. I don't know. Then I went and looked at the video. These iguanas are like at least like a foot, 2 feet. They're really long, big animals. And I guess when it gets really cold, they just sort of like freeze up. So it's a good opportunity for homeowners or locals to just like scoop up the iguanas and bring them to collection sites. And the video is just like all these people holding these big iguanas, like dragging them around and like piling them up. I mean, just wild stuff. Like it made me put my spider problem in context.
So are they pests?
Yes, they're considered pests. They're an invasive.
When they turn into iguanaskicles, that's a great opportunity for you to just like take them to the local iguana drop-off site.
Yes.
Where what happens to them at the drop-off after they defrost?
I think they're killed. I think so.
Oh my God.
I'm so sorry. Yeah.
I
I'm
saw
sorry
a
to
video
tell
of
you.
a guy who just had an armful of
Yes!
knocked out iguanas. And
It's
he sort of, like
crazy.
laid on the ground and stacked them all on top of himself.
It's just so wild to me. Like, I can't think of anything comparable that occurs where I live. We have so many like invasive this or that's, but nothing that gigantic, except the deer, which we've discussed a lot.
Yeah, but they
on Slate
don't.
Money.
They don't freeze.
No, it's
But
like
they are
as
worse.
if the deer froze and you'd go out onto your lawn and there'd be like a bunch of frozen deer and then you just picked them up willy-nilly, put them in a satchel, took them
I'm
to
perfectly in favor of killing deer. I'm not in
Right.
favor of killing iguanas.
Felix, you don't want to go down that road. We're going to get hate mail on that again.
Again.
Again. Again.
Again.
I think that was my least popular opinion ever on Slate Money when I was
People
like,
were
yeah, rats with legs. Anyway,
people were big mad.
Elizabeth, what is your number?
My number is 116,000, and that's the number of Instagram followers a guy named Mr. Flower Fantastic has. And this guy is a floral artist. He's self-taught. He's from Jamaica, and he's doing a show at the Brooklyn Botanic Gardens right now called Concrete Jungle. That's an orchid show that's New York City themed. But the best detail about this guy is he's anonymous, and he wears a big respirator gas mask and gloves, so nobody knows his identity. But he also does this because it turns out he's allergic to flowers, and he's a florist who has worked with like LVMH and, you know, all these big brands to do installations. But I also have a related but not coda. I feel like Slate Money, largely via Emily, has become the explainer for Gen A slang. And there's one that I just read about in the Times, and I asked my 10-year-old if he'd heard of it, and he was like, no. But do you know what a choppleganger is?
Yes.
Emily knows.
Yes. No, Chopplegang. I know
read
what a
the Times.
Choppleganger is.
Because you read the Times, or had you heard it before?
Because I read the Times and I know what
I-
chopped means.
I got Choppleganger from like one of my slacks that I'm in.
Tell
I
everyone.
don't think I have. I think I am a Choppleganger. I'm just like the guy that people look at and they're like, yeah, he's an uglier version of me.
Yeah. So chopped is slang for ugly, and then your choppleganger is somebody who looks like you but is uglier.
Yeah, I'm like a Choppleganger of Hugh Grant.
I've been told if the slang appears in the Times, though, it is over.
It's
cooked.
over. Yeah.
It's over. It's over. My number, moving swiftly on, my number is 22 billion, which is the number of euros that Stellantis is taking as a charge because it is pulling the same stunt that Ford pulled and is basically saying EVs. You know how we were saying like we are only going to sell EVs in Europe and half of our cars in the US are going to be EVs. We're making this big investment in EVs. Well, never mind. We're just doing a complete 180 on that. So their charge, which is $26 billion, is even bigger than Ford's charge.
Wait, is it 22 or 26?
22 billion euros, $26 billion.
Got it.
And this is interesting to me because it shows that, you know, first, Ford is not alone in doing this massive sort of strategic U-turn. But number two, we spent a whole bunch of time on Slate Money talking about what happened at Ford and thinking of Ford as having their sort of legs cut out from under them by the Trump administration. And thinking of this as like terrible for the American car industry. But, you know, Stellantis has a big American component to it, but it is a European company. And this is a European decision made out of Stellantis headquarters in Italy, and even, you know, and their U-turn is just as big, and in terms of dollars, even bigger.
We talk a lot about the Chinese EVs, and I had a hard time sort of thinking about them. But then I read Joanna Stern, the Wall Street Journal's.
Oh, she had a Xiaomi, and she loved it.
Everyone should read it. She wrote about it. She loved it so much. She describes it so nicely, and like it reminded me of like the old Walt Mossberg columns in the Journal where like he tries a technology and you finally understand what the hell it does. It was like that. I was like, oh, I want one of these Chinese EVs. She made it sound so amazing.
You know what Walt Mossberg did is he quit the Wall Street Journal to start his own company called
sure did.
Recode. Joanna Stern has just done the same thing.
Yeah, it's kind of a glut of tech writers starting their own Substacks though, because like the Washington Post just let go a lot of tech writers. They all, I saw like, were like, follow me on Substack. I have a Substack.
I think Joanna Stern is going to be more YouTube than Substack, but we will see.
I am excited about it. I hope it does well because we need more like normal people explaining technology and not using jargon or saying sass.
Joanna, come on this show and plug your product when you have one. We like independent media creators here at Slate Money.
Soon that's all there will be.
I think that's it for us this week. Thank you for listening. Thank you for staying invested in hodling the Slate Money RSS feed in your RSS podcast listening app thing, which I guess is software as a service. It all comes into one big, glue ball of tech. But we appreciate you. Thanks for being a Slate Plus subscriber. If you are a Slate Plus subscriber, we have a Slate Plus segment this week on
luxury gifting.
Luxury gifting. What rich people give each other when they give each other gifts.
What rich sex offenders give each rich people.
And that too. And mostly thanks to Micah Phillips and Shayna Roth and Jessamine Molly and Seaplane and Armada and all of the people behind the scenes who make this show possible. We love you, and we'll be back next week with more Slate Money. And remember to check out the Slatest, Slate's daily newsletter. It's your daily update on the most urgent, surprising, and unusual news delivered straight to your inbox. A special thanks to all our Slate Plus members. If you haven't already, consider joining. Slate Plus members get unlimited access to all of Slate's journalism, plus they get ad-free podcasts, and they help support our independent reporting.